Good evening and welcome to this week's webinar, Keys to Home Buying. Like my colleague Eddie said, it's a good time to purchase a home. Great time to be in the home buying business. My name is Kimberly Fridley. I'm the Membership Development Analyst here at USSFCU. And I just want to say we are so honored and privileged that you chose to spend some of your evening with us. As we talk about home buying. Please continue to spread the word. I always say this to your friends, your families, your colleagues, your neighbors about membership at our credit union. We are committed, of course, to taking care of all of our members' financial needs. It's my privilege and honor to introduce our panelist team. We have Edward, Eddie Villanueva, Member Engagement Assistant in the Marketing Department. He's the one who was talking earlier. Carrie Lazar, Membership Development Representative in our Marketing Department. We have Milton Aguilar-Bolanos. He's our Membership Development Officer. And it's my privilege and honor to introduce our webinar panelist expert, Mr. Jeremy Hill. Take it away, Jeremy.
And I appreciate the great intro. I just want to say thank you and welcome everyone to joining Keys to Home Buying. We have some good stuff for you. Major keys to home buying. Shout out to DJ Khaled. As we move through the presentation, I'm going to go ahead and turn my camera off, but you will see my email displayed there. So during the presentation, if you want to ask me any questions, you can feel free to shoot me an email during the presentation. However, we will have time to do Q&A at the end, but if you don't want to ask your question on the public forum, feel free to email me, okay? So if you want to move forward with the next slide, I'll go ahead and turn my video off. All right, cool. So
before you
again,
start, Jeremy, I just want to let people know that they can use the chat for any questions that you may have while Jeremy is doing his presentation. You can use the chat or you can do the Q&A feature. And at the end of his presentation, we will answer all the questions live. Go ahead, Jeremy. Sorry about that.
No, you're good, Eddie. I appreciate it again. So today we're going to be covering keys to home buying. We'll be walking through the steps home buyers take from preparing to purchase to working with a realtor and lender to searching for a home and officially making an offer. We'll also cover what happens after your offer is accepted all the way to closing day. Then finally, we'll wrap up with some keys to successful home ownership in the long term. All right. So making a decision to purchase a home is an exciting but potentially overwhelming time. Houses are typically the largest purchases many people make. So you definitely want to be prepared as possible as you enter the process. The first thing you want to do is work on gathering the documents you would need. So the exact documentation needed is going to vary, but typically it includes 2 years of W-2s and 2 years of tax returns. Also includes your 2 most recent pay stubs if you're paid bi-weekly like most people are, or 30 days worth of pay stubs. Your most recent bank statements will also need to be collected as well. So pretty much looking at all these documents, we're just making sure you have enough money in your account showing that you can afford the down payment and the closing costs. Also, we're hoping to gather from your pay stubs pretty much how much you're able to afford based on what you're bringing in every month. If you're relying on a relative to gift you the funds towards your home purchase cost, they will actually need to sign a letter guaranteeing that it's a gift and it's not a loan. In rare occasions, you may also be asked to share proof of your rental payment history. Okay. Moving on to creating a budget. Once you have gathered all your documentation, you want to use them to determine and create your budget. Start by determining your net income, which is the amount of money you actually take home after taxes and deductions. Next, list all expenses. It's helpful to look across multiple months and find an average, as expenses can vary month to month. Your goal here is to have a solid understanding of where every dollar you earn goes so that you know how much you can afford comfortably on a mortgage payment. It's also recommended to review your credit reports. You can review your credit reports from all 3 bureaus, TransUnion, Experian, and Equifax, for free at annualcreditreport.com. Reviewing all 3 reports is important because some of the creditors may not report to all 3 bureaus, so information amongst the bureaus can vary, so you definitely just want to be aware of that. Reviewing all three reports will help you have a clear picture of everything that's reporting under your name. If you find any errors at all, file a dispute with the credit bureau directly. This process can take some time, so the sooner you start the dispute process, the better, to avoid holding up the mortgage application process. You will want to find a realtor and a lender to work with. These folks will be guiding you through this big purchase, so you want to be sure that you trust them and you feel comfortable working with them. When looking for a realtor, it's a great idea to start by asking your friends, your family in your area who have had good experiences in their home purchases. That's probably the best way to go ahead and find someone to work with as far as a realtor is word of mouth. You can also search online for recommendations of local realtors in your area. Be sure to read reviews carefully and do some research before making the right choice. You probably want to consider interviewing a few realtors to decide on which one's the best fit for you and your family. As you research and interview potential realtors, it's important to make sure they have proper credentials. Of course, reputation is important, and you want to be sure they have the proper expertise to guide you through the process. An example of this, you want to make sure they actually know the market that you're trying to purchase in or the area that you're trying to purchase in. In addition to finding a realtor to guide you through the process, you're also going to need to find a lender to help you to finance the purchase. This should be the easy part, is you're all here with me today and I'm ready and willing to help you. However, I understand if you want to search around and compare rates across a few different lenders and submit applications within a short period of time to limit the credit impact, me or the credit union, we won't hold it against you. It won't be any hard feelings. If applications are spread out over several months, you may start to see your credit score drop due to multiple hard inquiries over a longer period of time. If the inquiries are close together, ideally within 1 to 2 weeks, it will be obvious that you're shopping around for a rate and it's not going to affect your credit score as much. Before looking at specific homes, you should have a pre-approval in hand. This will help you know for sure how much financing you can obtain so that you know your purchasing power going in. It's imperative to be pre-approved before looking at homes to prevent deep disappointment of falling in love with a home that is outside of your purchase price range. A pre-approval means that a lender is tentatively willing to finance a mortgage up to a certain amount. This is not a guarantee that you will be for sure get the loan, but it does let the buyers know that you have started the process and have reason to believe you should be able to obtain sufficient financing when you actually put your offer in. This can be a big leg up, especially if there's a place that has multiple offers. A pre-approval gives the seller confidence that you are likely to be able to move forward to closing. When issuing a pre-approval, it's imperative that you know you can comfortably afford it in your budget. Us as lenders, typically we won't look at all your living expenses, so we may pre-approve you for a loan that is more than what you're actually comfortable with spending. Know what you're comfortable with spending overall on a home, as well as what you're comfortable on spending on a monthly mortgage payment. You definitely want to share this with me up front, as we want to make sure that everything's in your budget and you're not overextending yourself and you're not becoming what we call house poor. You will also need to be prepared with sufficient savings for a down payment, closing costs, and other upfront expenses that can vary depending on the purchase price. This will also be important to consider when determining what price range you can afford. And finally, it is important to know that your property taxes and homeowner's insurance, which are typically included in your mortgage payment, are likely to change over time. When figuring out what monthly amount you're comfortable with spending in your budget, be sure there's enough wiggle room for taxes and insurance, again, because they may increase over time. Okay, once you have actually chosen a realtor to work with and you have identified the price range you're actually comfortable with and received the pre-approval letter, now it's time for the fun part, beginning to search for your home. Okay, So some of the things you want to think about when searching for a home, choosing a location is one of the first decisions you'll need to make as a part of your search. You want to ask yourself questions like, what neighborhood would you like to purchase in? How far away are you willing to live? Are there public transportations that can get you around? What are the property taxes like? Taxes can vary in some areas. If the property tax is increased or higher than expected to begin with, it could break the budget as it may lead to a mortgage payment that's out of your range. Consider what other things you would like to live near, like parks, libraries, grocery stores, public transportation, and anything else that is important to you. And finally, when choosing a location for your new home, it can be helpful to look into things like noise, traffic levels, and safety considerations, especially if you have little kiddos running around. Beyond your location, you also want to identify what are your needs and your wants. Start by considering things like number of bedrooms and bathrooms. What's an ideal number? What is a non-negotiable number to meet your needs? You may also want to think about square footage. Of course, like that means how big of a house you want, how big or small of a house you want. As well as what type of house you're looking at. Are you looking at a single family, or do you want to be in a condo or a townhouse? Do you love to be outdoors? Do you need to have space for kids or pets to run around? Outdoor space is another thing you want to consider. The kitchen is another key thing that many people have needs and wants related to. So you definitely want to take some time to determine what you need versus what you want, and what you may be willing to compromise on, but could potentially modify later on down the line. What other features of a home are needs for you and your family? Identify these non-negotiables and share them with your realtor so they can help you find the right place. Once you find a home that meets your needs and hopefully your wants, it's time to officially put in that offer. So some of the things you want to think about when actually working with your realtor to put the offer in is that you want to, first, you don't want to insult the seller by lowballing them. So you want to work with your realtor to find a purchase price that the seller will either accept or the seller will be willing to negotiate with you. Your offer can also include any contingencies you may want to include, which can range from agreeing that you can get out of the deal without consequences if the appraisal comes in low or the inspection indicates you need drastic repairs, all the way to agreeing to have time to sell your current home before closing on your new one. You may also want to request certain concessions from the seller in your offer, such as a seller assist that would cover some of your closing costs and reduce the amount of cash you would need to close. Typically, seller assists range from 3 to 6%, depending on a couple of factors. You can also offer and include when you would like to close on the home. You can also provide the seller with a deadline to respond to your offer. You will express how much money you're willing to put down as an earnest money deposit. This indicates to the seller that you are a serious buyer and plan to move forward with the purchase, giving them reason to confidently remove their home off the market. An earnest money deposit you put down goes towards your closing costs and down payment at the time of purchase. Reducing the amount of cash you need to close. So pretty much what this is saying, I mean, from my experience, the more money that you put down up front on your earnest money deposit, the more serious it looks like you want to go ahead and purchase the house. And the better it looks for you to actually being able to afford the house. So you want to keep that in mind. All right, so your offer is accepted. Once you have submitted an offer on your home, you're excited about it. Hopefully it will be accepted by the seller. There may be some negotiation, which you will work directly with your realtor on. Once your offer is accepted, there are some important steps to actually getting the deal closed. The first step would be to go ahead and narrow down which mortgage product you want to proceed with. That's where I will come in and I can help you. I'm going to explain a few different types of mortgages here. The most common mortgage type is a conventional mortgage. These tend to have stricter lending requirements and are typically an option that makes sense for someone with a higher credit score. An FHA mortgage is designed to help homeownership and make it possible for someone with a slightly lower credit score or a slightly lower income. These mortgages are backed by the Federal Housing Agency, hence FHA, with lower down payment and credit score requirements. FHA loans can be a great option for many first-time homebuyers. If you're a veteran or an active duty service member, a VA mortgage may be a great option for you. National and Reserve members may be eligible as well. VA loans allow you to purchase a home with no money down, competitive interest rates, and oftentimes very limited closing costs. Veterans or service members must obtain a certificate of eligibility through the VA. Another government-backed mortgage is called the USDA loan, which is specifically for properties that fall in defined rural areas. Your mortgage, so there are two different types of mortgages. It's either going to be a fixed rate or a variable rate. A fixed rate means the interest rate will be or remain the same for the life of the loan, while an adjustable rate mortgage may change over time. Typically, adjustable rate mortgages offer one rate for a defined period of time, after which the rate may change to match market rates. So this means depending on where the market is, your rate can go up or down, which means your payment can go up or down. One thing that can be helpful is to understand the difference between, and one thing that can be helpful when shopping for a mortgage is knowing the difference between an APR and the interest rate. The interest rate is the percentage you're required to pay to borrow the money for a period of time, versus the APR, it includes the interest rate, but also adds in any other fees you'll pay the lender in order to better represent total annual cost to borrow the money. Comparing APRs with choosing a lender can give you a better idea of the more affordable option compared to just looking at the interest rate. Again, so I'm not going to hold it against you if you shop around for rates and you just don't go with me, but make sure you're looking at the APR whenever you're comparing lenders. That's very helpful. While it is possible to get a mortgage with less than 20% down, you'll typically be required to pay for additional insurance that protects the lender because we are taking on more risk by lending you more of the home's value. If something were to happen and you were to default on your mortgage, we are at higher risk of a loss. This insurance is called either PMI for conventional or MIP for the FHA loans. PMI, which is short for private mortgage insurance, is typically required it's typically required if you obtain a conventional loan with a down payment that is less than 20%. Once you reach 20% equity in your home, you can reach out to the lender or me to request your PMI to be canceled. If you don't proactively request the cancellation, however, it will be automatically taken off once your principal balance reaches 78% of the home's original value. Mortgage insurance premium, known as the MIP, is required for all FHA loans, regardless of how much money you put down. A few of the key differences with MIP compared to PMI is that FHA loans require not just an annual MIP, but not just an annual MIP, but also you'll have to pay an upfront payment as well for the insurance. So it's a little bit more added cost when it comes to the FHA loan. This upfront MIP can be financed as a part of your loan, and both MIP and PMI are typically paid as a part of your monthly mortgage payment. Another key difference is that MIP will typically be required for the life of your loan, which means it will never go away, versus the conventional where it goes away at 80 or 78%. Unless your down payment was 10% or more. If you made this size of a down payment, MIP can be canceled after 11 years. If your down payment was less than 10%, your MIP will not cancel until the loan is paid off, or if you were to refinance into a conventional loan after reaching at least 20% equity. So those are the only two ways to get rid of the MIP on the FHA loan, is if you put it upfront initially 10% or more, it'll be removed after 11 years, or you go ahead and refinance after you reach 20% equity. Typically, your monthly mortgage payment includes four main concepts. So that's going to be what we call PITI, or principal, interest, taxes, and insurance. We just talked about one of the forms of insurance, but you will also need homeowners insurance and will have to pay property taxes as well. While property taxes and homeowners insurance are typically paid out once per year, you can pay towards the annual amount on a monthly basis as a part of your mortgage payment. This goes into what's called your escrow account, which your mortgage company will hold onto and then pay out your taxes and insurance when they come due every year. Once your lender or me reviews your escrow account to determine if sufficient, I'm sorry, once a year, your lender will review the escrow account to determine if sufficient amount is collected to ensure that taxes and insurance can be paid on time. So essentially, at the end of the year, we'll do an analysis on your escrow account just to make sure that we're collecting enough to go ahead and pay out the taxes and insurance when they come due each year. Okay, so after your loan is accepted, we're going to go ahead and send it to our underwriters. After your offer is accepted and you apply for the mortgage, we're going to go ahead and start the underwriting process, which they look at a variety of factors. The first is which is capacity. Do you actually have the ability to repay this loan if we extend it to you? Our underwriters will review your income and employment history, how much money you actually have in savings, your current monthly debt payments, and other financial obligations. We'll review how the requested mortgage payment fits in all of this. The second thing we'll look at is capital. Do you have the cash or assets available that you could turn to it to meet your mortgage obligation? This also shows a potential lender you have excess funds available on a monthly basis to save or invest, further proving you can afford the mortgage payment. The next thing underwriters will consider is your credit history and credit score. This will indicate to us how you have managed accounts previously and how you're managing them currently. This will indicate how risky it is to actually give you a loan. The higher your credit score, typically the more options you'll have available to you. While it is still possible to get a mortgage with a lower credit score, it's probably your best interest to get your credit score as high as possible before applying. Right now we have products, the minimum credit score is 620. So just keep that in mind. And finally, we're interested in the collateral which you are pledging on the loan. This means the actual home itself. We will want to ensure the home is worth enough to cover our losses if you were to fall behind on your mortgage payment. This is typically determined through a home appraisal. Once you have submitted a full mortgage application, you will receive a loan estimate. We are required to provide this to you within 3 business days after receiving your completed loan application. This loan estimate is not guaranteeing you that your loan application is approved or denied, but it is designed to give you all the details you need to know if you decide to move forward with the loan, including but not limited to the estimated interest rate, the estimated monthly and payment you can expect, including the estimates for the portion that will go towards your taxes and your insurance, the estimated amount of closing costs, and the estimated amount of cash you'll actually need to bring to the closing table. The next step I would recommend will be the home inspection. So home inspections are not typically required, but they are definitely highly recommended. A home inspection is for your protection as the buyer. It is to help you enter the purchase with a clear idea of any flaws or any warning signs in the home. You, as the buyer, will choose your home inspector, so be sure to shop around for one that you can trust. FHA loans may require a specific inspection to ensure the property meets certain standards, but again, it's still recommended for you to go ahead and hire your own inspector. It usually costs anywhere between $300 to $500, FYI. When you have made your offer, you have included contingency related to home inspection findings. If an inspection shows a major issue and a large repair is needed, you may be able to negotiate with the seller to ask them to fix, to reduce the purchase price if you prefer to fix it yourself, or you may have the right to cancel the agreement to purchase the home Altogether, if you're dissatisfied with the inspection, it cannot agree with the seller on resolving these issues. This is something that you want to talk to your realtor about in detail when submitting an offer to make sure you're fully covered as a buyer in case something goes wrong. However, a home appraisal is something different than an inspection. Inspection is designed to give the buyer a clear picture of the condition of the home, while the appraisal is designed to let the lender know how much the property is actually worth. So that's something that we'll take care of on our end. We'll go ahead and hire the appraisal and we'll schedule it, usually with the listing agent, to go ahead and verify the value. The appraisal will confirm again how much money we can extend to you based on the value of the property. If the appraisal does come in lower in the rare case, then the amount you're asking to borrow, you're actually asking to borrow, you'll either need to come up with the difference or you'll need to negotiate with the seller to bridge that gap. All right, cool. So closing date. So finally, once you've gotten through all the paperwork, all the phone calls, inspections, appraisals, and you gather all the money you need, it's time for the exciting part. Closing day. Leading up to closing day, you'll receive some documents ahead of time to review that can help speed up the process. You'll definitely want to review these documents closely. You'll definitely want to review these documents closely and to reach out to your realtor or lender immediately if something seems incorrect. Legally, you're required to be sent your closing disclosure 3 days prior to close. You'll also want to confirm with your realtor the exact location that you will be closing. You want to plan to arrive early. You can also request a final walkthrough of the home, which can be used to confirm the seller has made any requested repairs, make sure the home is still in good condition, and verify that all agreed upon appliances remain in the home. Prior to closing day and receiving your keys, you will need to reach out to the utility companies to schedule all utilities to be transferred into your name. That way, whenever you walk in the home, you won't be in the dark and you'll have lights. You will also want to connect with your realtor and lender about what you need to bring to the actual closing table. Typically, you just need your ID. If you're not sending a wire, you'll just need a cashier's check as well. All right. So after you've signed your more paperwork than you can ever imagine, handed over all of your money and got your keys, congratulations, you're officially a homeowner. The journey doesn't stop with walking through the front door, however. Before I wrap up here, I want to share some keys to successful home ownership beyond the closing date. All right, so the first step beyond the closing date is to prioritize rebuilding your savings as soon as possible. If most of your savings went towards the down payment and closing costs, moving expenses, it can be tempting to just jump right in and do your renovation projects, but pausing first to get money tucked away for emergencies is definitely recommended. As a homeowner, when appliances break, guess who's responsible? You are. You can't call the landlord anymore. It's also recommended to map out an annual maintenance plan. This is something you can research online for recommendations of what to include, when to do it, and how often you should do it. Figure out a method to stay organized and keep track of maintenance completed, as well as what maintenance needs to be completed. As we discussed earlier in this presentation, your mortgage payment may increase as your homeowner insurance and taxes change. As you revisit your budget from time to time, keep this in mind and be prepared for a potential increase in your payment. As you plan for what repairs and improvements you want to make to your new home, prioritize any major concerns the home inspector found. These may not always be the most fun or cosmetically pleasing improvements, but they can be the most important to take care of. For example, like any structural issues in the home, you definitely want to take care of that first. And the final key to always prioritize your mortgage. Foreclosure can begin 3 months after falling past due on your mortgage. So making this payment your top financial priority every month is strongly recommended. If you are ever concerned about making your mortgage payment, please reach out to us as soon as possible. There may be both short and long-term hardship options available, and the sooner you explore them, the better. So this is our information here. So Kim and I are the 2 loan officers here. There's our information, so feel free to reach out to us. There's a generic email box there as well. you can send an email to. Of course, again, you can send an email directly to me if you want to keep the conversation going. You see the closing cost credit there for 1,500. You have about what, 9 or 10 days to take advantage of that. So definitely, if you're thinking about applying, you need a pre-approval, go ahead and apply because we can you would definitely qualify for that up to $1,500 closing cost credit. And to conclude, I do want to mention, I don't know if Eddie or Carrie wants to talk about this, but we're having an after hours event next week and everyone's invited. You do need the RSVP. I believe, can you scan that QR code to RSVP or would you send it?
That is correct. Yeah, they can,
Okay.
you can scan the QR code.
Okay, awesome. But yeah, definitely it'll be, we can, like I said, we'll be keeping the conversation going. It'll be 2 mortgage experts there, Kim and I, and then you'll have it Sharon as the home equity expert. And if you need it or you don't have a realtor yet, Phil will be there to answer any questions you have as well. So that concludes the presentation. I just want to say thank you everyone for joining us. And that was Keys to Homeownership.
All right, Jeremy, thank you very much for sharing all your knowledge, going through very important information when it comes down to, buying your home. Many people don't know how to start the process, what's needed, but I think after this presentation, they can have a good idea as to what documents need to be collected, what the process is like. So we appreciate you for once again sharing your knowledge. And we're gonna go over some questions. Jeremy, you can answer them, but I know that our panelists are very knowledgeable, so any of you can answer them as well. And the first question is for whoever, Jeremy, Milton, Kim, even Carrie, she wants to jump in, she can do that as well. The first question is, if USSFCU is my primary financial institution, will I be eligible for a reduced interest rate? This person had an auto loan, and because of having that membership with us, they got a reduced loan rate. So does that apply to mortgages?
So yes and no. We already have very competitive rates. So I would say reach out to me directly. We can talk more about that. But we do take it. I would say we do give decent rates to our members.
All right, perfect. And like Jeremy was saying, we want to emphasize that our rates are very competitive. And talk to him directly. He can work some magic. He's been doing this business for a long time, so he can make something happen for you. Milton, do you see a question on your end?
Yes, Eddie, give me 1 second. I'm pulling it up right now. So actually, we do have a question here from one of our participants, and the question, this is obviously for you, Jeremy. Where can I find an estimate of what my taxes will be before I purchase a home? So do you have any information as to where the potential buyer can look up and see where they can get that information related to taxes before they make that purchase?
Yeah, absolutely. So if you look on any of like the real estate sites, they usually have an estimate. So like Redfin, Zillow, Realtor.com, any of those will be able to give you an idea of how much the yearly taxes would be. Because they usually have it on there based on last year's tax assessment of what it's going to be. So you can get an idea that way. Or you can just reach out to your realtor. They should have an idea as well.
That's a great question, and again, the products that we were talking, Jeremy was talking about, just so everyone has a clear understanding. Nowadays, if for anyone that wants to get into the market and actually becoming a homeowner, knowing that you're going to get yourself a fixed interest rate for the life of the loan, that's very important. But also it's important for you to know as well too that your monthly payment, your mortgage payment for your interest and principal will always be the same. But the only time that amount will change is in the event, if the taxes go up, and also your what we like to call the escrow, right? Whether it's your taxes and insurance, because those sometimes it's gonna be going up and down perhaps, and mainly up, just because we know there's one thing that we know and we see in the history when it comes to the taxes for real estate. That's something that it's gonna go up, which as a homeowner that actually might be a good thing, because if that's the case, then it means your property is gaining more value. So now it is, you are now having more equity to your house. So again, that's a good problem to have, but just
Right.
understand that your payments will change from time to time, but it's only because of the escrow account, which is your taxes and insurance. That's a great question related to taxes.
All right, perfect. Thank you, Milton, for sharing some of your knowledge as well. As a homeowner, you can speak from experience. So that's what we like, because we practice what we preach over here in our webinars. So anything that you see that we recommend or anything that we tell you to try is because one of us have tried it. So thank you for that. Another question: from making an offer to closing, what is the average time of the process?
Typically, the process is about 30 days from start to finish. From your offer being accepted to the closing table, it's about 30 days is the average.
All right, perfect. That's a quick turnaround, in my opinion, because I've heard other institutions pushing it over 30 days. So that's a great, average time that you're giving us. And hopefully that can inspire people here in the webinar to, start the process right away, because the time to buy a home is not yesterday, because it already happened. It's not tomorrow, because the guarantee is today. So
And we got the closing cost credit, to the end of June. So you got to take advantage.
there you
Yeah,
go.
absolutely, definitely take advantage, and like you guys were alluding to, and just so everyone knows, there's a difference, when you come and do the process with a credit union, especially here with us. I mean, I will say though, although I'm one of the newest one here in the group, but the what makes us, what sets us apart is definitely going to be the people that will be helping you throughout the entire process. And I will say that, the journey itself, it's going to be an exciting one, but sometimes, it's going to have your ups and downs, but it all comes down to, who is your mortgage loan officer, or who is your realtor. Those are the people that are going to make the difference in the entire process. So choosing the right team, to help you along this journey, it is truly important, and to which, again, once you get to experience or level of services that we provide here at the United States Senate Federal Credit Union, it's one that we get so many great feedback from our members. As a matter of fact, Jeremy touched a little bit about the after hours event that we have next week. We just had one about 2 months ago in DC, and I will say that we had a couple of members that came in and they wanted to be there in person just to say thanks to Jeremy and Kim because of the process that they went through. And even though the rate that they received might have not been the lowest in the market, but the process itself, the fees that we charge here are totally different. And like Jeremy alluded to, you have to be very careful. Don't look so much into the interest rate, but rather into the APR, because that is what's going to make the difference, especially when you get into a 30-year mortgage. So again, it's very important that you have the right team with you in the journey, and that will just, again, will just make your process very seamless. So wanted to, throw that in there as well.
All right, perfect. What you just explained reminds me of those commercials when they put a subtitle, "No, a pay actor," It's true. I'm a witness, of that. Jeremy, actually, there was a member that came to him and he was like, "Hey, where's Jeremy?" I walked him where Jeremy was. He was very thankful, especially because he was moving from the West Coast to the East Coast. That's a big transition, So Jeremy, thank you for making our members, priority, and especially for them to reach their dreams and goals. Another question that I have on the chat from Anonymous, anonymous member is there a cap on how much the escrow portion of your payment can increase?
No, so there's not a cap. Again, it's pretty much just moves right along with how your taxes move. Taxes and insurance will change. So depending on, how that changes, that's going to affect how your escrow amount changes or payment changes. So of course, if your taxes go up $20,000 the next year, then your escrow is going to go up probably a few $100s to go ahead and cover that. There's no cap.
All right, perfect. Now there's another question. Can you explain a bit about what points are? And should you pay them?
Sure. So a point is going to be, 1 point is 1% of the loan amount, and typically it decreases your rate about an eighth of a point on the interest rate. Should you pay them? It really just depends. You want to keep in mind your break-even point when it comes to points. So for $100,000 loan, you're going to be paying $1,000 on that. So depending on how much you save on your monthly mortgage payment versus that $1,000, that's going to determine if it's going to be worth it for you to pay it or not upfront. So it really just depends on how long you're going to be staying in the home.
So that's a conversation that they will have with you, correct? Or
Yeah,
is
you
that-
can reach, if you want to go into more in depth, you can definitely reach out to me directly. We can talk about that. And I can actually crunch the numbers for you, and I can send it to you on paper. That way, you know exactly if it's worth it for you.
That's perfect, having everything on paper, so that way the member can have an idea as to what they're getting into before any signing, because once your signature is on paper, that the deal is done. But it's great that Jeremy can provide that, those numbers, so you can confidently get into the loan, or into the home, I should say, that you want to get. Another question that came anonymously from a member is saying that they're expecting a gift from their parents as a down payment for a home. What documentation do they need to show that that was a gift, or as long as they show that bank statement with the deposit should be enough? Or is this something specific that we're looking into in order for them to prove that, oh, I got this extra money as a gift, as a down payment for the home?
Yeah, so just a simple, like you said, the transfer, it's showing the paper trail and the transfers from your donors to your account will be enough, on top of the gift letter that they have to sign. Essentially what the gift letter says, it is a loan for you to use. I'm sorry, it is a gift for you to use, and it's not a loan. It's not expected to be repaid. And that's essentially all we need for that.
All right, see, it cannot get simpler than that,
Yeah,
everybody.
it's
So,
pretty simple.
of course. And if you have family members that are willing to give you money, take it. Take advantage of it, because
absolutely.
it's good money. Does USSFCU do mortgages in all 50 states?
Yes, we do purchases in all 50 states. We don't do refinances in Texas, but we do purchase loans in every state.
I'm talking about refinance, you're talking about refinancing. Once somebody gets a home, is there a time where they can refinance, or they can refinance right away? What would you recommend?
Yeah, so with our products, there's no time limit that you have to wait. If the rates drop and it's beneficial for you to refinance, you can certainly do so immediately.
Perfect. Do you see anything else on your end, guys?
I do have one last question here for Jeremy, if you don't mind, and that is, once I get my pre-approval, how long is the pre-approval for, and what happens if I go past the pre-approval time?
So that's a good question. A pre-approval is good for as long as your credit report is good for, which is 90 days. If you wanted to renew it after the 90 days, typically what I would need to do is just take a look at your credit report again, maybe look at some updated financial statements just to make sure, nothing has changed majorly, and then I can go ahead and get you the updated pre-approval letter, which would be then good for another 90 days.
Perfect. Thank you so much, Jeremy. You know what, you provided so much great information today. Hopefully our members, will find that, very helpful. And again, the most important thing that we want you to know is that here at the United States Center for Credit Union, we have an amazing team. They have a combined experience. I believe it's over 20 years of combined lending experience with both Jeremy and Kim. So, again, if you do have any questions, if you are thinking about getting into getting in the market and testing the water, by all means, come in and talk to us. Jeremy and Kim will love to set up an appointment. There's no cost for that, just so you know. Don't be afraid. It's completely free. They will be able to give you an estimate, give you an idea as to what the kind of like go through the numbers with you, kind of like look and perhaps even review your credit and see if you need to, what are some of the things that you might need to do in order to obtain the best interest rate available that we can provide to you. And all of that, again, it's just a quick call away. So Jeremy's phone contact information, it's on this presentation, and we're gonna send it out to everyone. So with that being said, Jeremy, again, thank you so much for joining us.
Thank you.
Yes, sir. And we look forward to having you back, perhaps in another future presentation. But with that being said, before we wrap up this presentation, I just want to invite all of you to our next mortgage event that's going to take place next Wednesday. If anyone is interested, we would love to have you join us. There's the link there then for where you can go ahead and RSVP if you want to join us. We would love to have you. Again, you get a chance to meet Jeremy and Kim in person, and we also have our home equity expert Sharon McDonald, and we also have Phil, who is our real estate agent. He is very knowledgeable and he's been a realtor for many years here in the DC area. So again, we want to extend the invitation to all of you to come in and join us. And also, continuing with our webinar series, we want to invite you also to our next week's webinar. Again, as we mentioned early in the month, this month it's all about awareness for our older adults and preventing fraud. So with that being said, our webinar for next week is protecting your aging parents. That will be led by your very own Ken Freely. So again, we want to invite all of you to attend that webinar as well too. It's going to be an exciting one also, like every webinar we do every Wednesday here. So with that being said, Jeremy, Carrie, Kim, and Eddie, thank you all so much. And I look forward to seeing you all back again next week.
We can wait to see you next Wednesday. We're going to have food. We're going to have drinks. We're going to have surprises, gifts. Come join us. You won't regret it. And with all the experience that Jeremy has, you would think that he's a baby boomer, but he's young, but he has all that experience. So come meet us in person. I would be gladly to meet you. So thank you everybody for joining us. And have a great evening, okay?
Thank you.
Bye-bye.
Thank you.